Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the key highlight events for the week, with a key focus on the main event, which will be the non-farm payrolls on Friday. Of course, we'll try to understand the current movements in major forex pairs. We'll be looking at gold as well as US equity indices, and once we do that, hopefully everyone will trade from an informed perspective. So as usual, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So good morning, Ken Moneki. Thank you for joining. Manabasto, Paul Carrier, thank you guys for joining the session. So let's get things started right away, and I'll be starting with the economic calendar. So from what you can see on the economic calendar, we don't have much happening today. So remember, we had a shortened week last week when we were focusing on the Thanksgiving holiday on Thursday, and of course on Friday, this is when we had the Black Friday sales happening from various retail chains. And now, as we enter the new week, we had quite a number of reports this morning. One of them being the retail sales from Australia, which came in better than expected at 0.6%. So it's also important to notice the current spike in manufacturing in China, where Kaizen manufacturing PMI released at 4:45 a.m. earlier this morning showed that manufacturing had improved to 51.5, up from 50.3 in the previous reading and above expectations of 50.6, which basically indicates that China's manufacturing is recovering. Values above 50.0 are considered to be expansionary, and this has been positive, especially for oil prices. So we have seen oil prices regaining some form of strength this morning. So final manufacturing PMI for Japan came in at 49.0, just as expected, and the same as the previous readings. And of course, the retail sales from Switzerland came in at 1.4%, missing the expectation of 2.6%, and of course, lower than the previous reading of 1.8%. So going forward, for the rest of the day, we'll be looking at more manufacturing PMI data for Italy, France, Germany, and of course, overall the Eurozone at 12 p.m. Then later on in the afternoon, we'll be getting the Institute of Supply Management or ISM manufacturing PMI from the US. And these will be happening at 6 p.m., which is the main event of the day. But before that, at 1 p.m., we'll also be getting the unemployment rate report from the Eurozone, where we're expecting that the value remained the same at 6.3% in the month of October. So going forward through the week, we'll be getting inflation reports from Switzerland at 10:30 a.m. on Tuesday. Then a sequence of job market reports for the US, including the JOLTS job openings at 6 p.m. on Tuesday. GDP data from Australia at 3:30 a.m. on Wednesday. A speech from Bank of England Governor Bailey before we look at the ADP non-farm payrolls at 4:15 p.m. on Wednesday. So ISM services PMI will also be released at 6 p.m. for the US, and the same time we'll be getting the factory orders month over month, 6 p.m. on Wednesday. Then we get the crude oil inventories at 6:30 p.m. So after that, we'll get two speeches, one from German Buba President Nagel at 8:10 p.m. and Fed Chair Jerome Powell will be speaking at 9:45 p.m. and this should be on Wednesday. So fast forward to Thursday, we get retail sales data from the Eurozone. Then all day we'll be having the OPEC meetings on Thursday, and of course the unemployment claims at 4:30 p.m. as well as the US and Canadian trade balance at 4:30 p.m. on Thursday. So towards the end of the week on Friday at 4:30 p.m., we'll be getting the official non-farm employment change, where we're expecting an increase of 202k jobs in the previous month, and this is up from the previous reading of 12k. At the same time, we'll also be getting employment data from Canada, where we are looking at both the unemployment rate as well as the unemployment change for the prior month. So as we approach the end of the week, preliminary University of Michigan consumer sentiment survey as well as inflation expectations. And on top of that, we'll be getting 3 speeches from FOMC members Goolsbee, Hallmark as well as Dali. So outside of that, in the economic calendar, there is quite a number of things currently going on in the markets. So one, we've already seen the key highlight of this morning that China manufacturing growth beats forecasts. In this case, coming in at 51.5 in November 2024, up from 50.3 in October, which is the prior month. So outside of that, UK house price growth accelerates, meaning that the housing prices are increasing. Turkey manufacturing downturn eases. European markets set for lower open. Japanese shares gain on tech as well as bank boost. Russia factory activity growth at 3-month high, and Indonesia inflation rate lowest in over 3 years. So those are some of the key highlights in the markets today. So we'll be diving deeper to see what are the progressions that we may be expecting for the rest of the day. So among the key highlights that we've just seen in the economic calendar, I know there's quite a number of other things that are not on the calendar. So one of them basically being that it's still a busy week on the earnings calendar, and we'll be expecting earnings on Thursday for American Eagle Outfitters, AO, Campbell's, ChargePoint, Chewy, and Cracker Barrel, Dorotry, Five Below, Foot Locker, Hormel Foods, RBC, as well as Victoria's Secret, and this should be happening on Wednesday. Then on Thursday, we have BMO, Build a Bear Workshop, Dollar General, DocuSign, Hewlett Packard Enterprise, Kroger Lululemon, Petco, TD Bank, and Alta Beauty. So among the key highlights that we'll be focusing on this week is Salesforce, an SaaS company or software as a service company that has been on the forefront of AI adoption and making big news this year. So analysts expect the company to report earnings of $2.45 per share, up 16.1% year over year. These earnings are expected to come from a revenue of $9.4 billion, which is expected to have increased by 7.2% year over year. So a comment here from Oppenheimer analyst Brian Schwartz. In our view, CRM has a favorable setup to be a good improving business story over the next 12 months, driven by AI or artificial intelligence product cycles. Positive outlook for the fiscal fourth quarter, easier year-over-year comparisons, and continuing margin growth. So that will be a key highlight of the week. And as we progress, I'd also like to notify you that India interest rate decision will be coming up this Friday. And so far, as of this morning, the Indian currency or the rupee hit a new all-time low against the US dollar. And what we have been witnessing as from the market activity is rumors of the Indian central bank basically participating in the market, selling dollars to support its currency. So in this case, we could be seeing the Indian rupee making some form of recovery despite hitting new all-time lows. So among other highlights for the week, Eurozone manufacturing PMI and unemployment on Monday. UK S&P Global CIPS UK manufacturing PMI. FT Global Banking Summit in London through Deck 4. Also on Tuesday, we'll be getting the Bank of England Governor Andrew Bailey being a panelist and presenting his speech. So China Kaizen Services PMI on Wednesday, Eurozone S&P Global Services PMI, as well as Producer Price Index on Wednesday. So ECB President Christine Lagarde appears before European Parliament committees on Wednesday. Fed Chair Jerome Powell speaks on Wednesday. OECD publishes the economic outlook on Wednesday, and Eurozone retail sales on Thursday. German factory orders on Thursday. OPEC and non-OPEC ministerial meeting on Thursday. Of course, as I mentioned, India rate decision on Friday. Eurozone GDP on Friday. US unemployment, as well as the non-farm payrolls on Friday. And of course, we'll also be getting the Canadian report at the same time. So outside of that, I don't know if there is anything that is notable or a key highlight to follow for the week. So just trying to check. Just give me a sec. Yes, there is some story developing on the yen. So I'll be showing you some highlight here. So yen pairs gains. The dollar gained 0.4% on the yen to 150.71, having shed 3.3% last week in its worst run since July. Support rise around 149.47 with resistance at 151.53. So over the weekend, the Bank of Japan Governor Kazuo Ueda said the next interest rate hikes are nearing in the sense that economic data are on track, following figures showing Tokyo inflation picked up in October. So data out Monday showed business investment running at a healthy 8.1% clip in the third quarter, encouraging markets to price in a 63% chance that the Bank of Japan will hike by a quarter point or 25 basis points to 0.5% at its policy meeting on deck 18 to 19. So, with the market expecting another 25 basis point hike, that should be quite strengthening for the yen, especially as we approach the 18th to the 19th of December. So, Barclays economist Christian Keller said data on labor earnings this week should show a further pickup, and all the signs were pointing to another strong Shanto wage round in February. So the wage and inflation picture continues to support further rate hikes, though whether the Bank of Japan moves in December or January remains a cross call, he added. So the European Central Bank is seen cutting rates this month, with markets implying a 27% chance it might even ease by 50 basis points on the 12th of December. So clearly, the second week of December might be quite busy with rate decisions from the Bank of Japan, the European Central Bank, as well as the Federal Reserve Bank of the US, all happening in the same week. Of course, we'll be seeing some volatility. So be prepared for those market patterns shaping up this week. So that being said, I believe now we can jump straight and look at some technical analysis, try to understand what are the key market developments and expectations for this week. And once we understand that, then hopefully everyone will get to trade from an informed perspective. So I'm just checking the comment section. I can see Avogadro from UG. Thank you and good morning. You can see Inamora. Thank you for joining. Clavijak. The question on JPY pairs, as you mentioned, there is increasing confidence that we could be seeing some form of a rate cut happening. Rate hike happening in December. So we'll bet. Good morning, Ronald Hillary. Thank you for joining. So, what's your opinion on trading during the month of December? Given that it's a holiday month, I'll be responding to that. Dennis Mwangi, thanks for joining. Lamik Buire, Ronald Hillary, and Wangari Patrick. So I can see some good comments here that you're ready for the Mombasa tour, which is happening on Friday this week. So let's look at the charts and try to understand what are the key developments. So one thing I mentioned with Chinese manufacturing improving earlier this morning, we have seen oil markets begin with quite an uptick. So if I just clean my chart and remove everything, you'd notice that the oil markets opened with a gap downwards. After opening with a gap, there was a slight push lower to the previous support, and immediately the market bounced and has been bullish for the rest of the morning session. So of course, we expect some further upside to be playing around. So potentially we could be seeing Brent oil extending the rally and getting to around $72.8 per barrel. So the dollar index started on quite a strong bullish run after hitting a bottom on Friday last week. So today you can see right after the market opened, we already broke the high of Friday. We are currently breaking the high of Thursday last week, indicating that there is strong bullish momentum for the dollar, and this is being reflected in the major pairs. So for instance, if you are a USD Swiss franc trader, then you know that we have already bounced from a key level support We are currently retesting the high that we saw on Thursday with the potential of extending this rally to an area we had identified as a target last week around 0.88668. So if you are a fan of New Zealand USD currency pair, then we are seeing some form of reversal as the dollar strengthens against the New Zealand dollar. So there's still some more room for downside momentum with key level support at 0.588. So there's still more room for this market to extend the bearish momentum to around this area, which was the lowest price on Friday. So looking at other major pairs, we can see the Australian dollar against the US dollar is also making some major pullback here. So if you go to the 15 minutes chart and then you try to observe the lows that we were observing last week, then there has been a breakout early this morning, and the first retest and the second retest of the same area. And now it seems more likely that the market is really testing the lowest price that we saw here on Friday at midnight before the market opened. So, of course, we can observe that there is quite a number of lengthy tails towards the lower side, indicating that the market might be rejecting much lower prices. So, it's more of a wait and see kind of market for today. So, as for the yen, this is what we are currently witnessing. So, we had this area that we had identified as a key level support. The market broke, retested, and continued moving lower. But then, if you look at the market open today, the dollar opened currently very strong, pushed a bit higher, retested a key level area here, which was basically acting as the support as of last week on Thursday. But now, upon retesting this area here, we are seeing the market now pushing lower. So after getting to this area here, and with the news and expectations of the Bank of Japan going ahead with a rate hike in December, then we expect the yen to continue strengthening. So in this case, perhaps a retest of 149.43 price action level. So for the pound USD, of course, we don't have an expectation of a new announcement, let's say a major rate cut. So for now, the current market price action continues. And of course, from the forward chart, you can see we had quite a major rejection of higher prices last week. So if I zoom out, then you'd notice that the key level resistance that we saw here, and this happened on Thursday, was on Friday, was retested towards midnight, and the market immediately reversed. So we could be seeing some further downside momentum. So the daily time frame, it was the first red candlestick in about 4 days. So of course, this kind of price action we are seeing today might lead to some further selling if the dollar remains strong in the markets today. And if we happen to break the previous support, which is the lowest price that we saw on Friday, then there's still more room for downside with a potential extension to 1.26444 price level. So for Euro USD, we continue seeing this bearish momentum after the market broke the lower trend line. So in this case, we have already broken Friday and Thursday's lows, which basically implies that we could be seeing even some further downside, especially after the market was unable to form higher highs towards the end of last week. So in this case, there's a key level that is being tested here. So this is a level that has been holding for quite a while. So of course, we continue observing this area here with the potential of a breakout leading to a further sell-off. Of course, we could be expecting the market to extend to 1.04244, and this is quite possible owing to the fact that the market was unable to create higher highs towards the end of last week, being unable to reach the previous highs around 1.06061. So as for pound yen, we continue seeing the same thing, similar price action with what we are seeing in the dollar. Of course, last week on Wednesday, Thursday, we expected some further upside, market retesting this area. Didn't quite get to that point. There was a big sell-off on Friday early in the morning, and now there is that potential that the market extends the bearish momentum as we look forward to a potential rate hike in Japan in the month of December. So there's still more room for downside, perhaps even going further downwards to around 188.291 price action level. So that being said, the Nikkei 225 index is still continuing with the bounce from what happened last week. So we could continue seeing the market pushing higher, especially with an aim of retesting the previous high, which was the highest price level we saw last week. So this bounce was pretty strong. I expect the market to continue pushing higher. So for the price of gold, we are currently in this cycle where the market is making these big swings along these two trend lines, forming both, I would say, lower low as well as a lower high last week. Then on the 1 hour chart, this is what we were experiencing last week. So the market basically bouncing from this area and attempting to move higher. But then that was faced with a big sell-off that happened early this morning. And from the 15 minutes chart, what we are seeing here is the market of gold making an impressive drop at the market open today. But after the big sell-off, notice how the market found some form of support around this area here. And it seems like the market is now changing direction. So from the 1 hour chart, notice that it's a key level support, it's a key level bounce. So we could be seeing the market now heading to the previous high. And this was the high that we saw last week on Thursday, around 26.57. However, that is not written down in permanent paint. Of course, the market could extend the bearish momentum to around 26.02. And it's a key level that we had identified here last week as a potential support area. So, of course, now that we are seeing the market bouncing here on the 50 minutes chart, it's not guaranteed that the market will continue pushing, especially given the strength of the dollar. So with a strong dollar in the market, this could be a temporary bounce and the market continues in the same direction. So be very careful, especially if you're looking for bullish positions, given the big sell-off we saw last week. And now as the market opens, there's another sell-off, which basically indicates that gold could still be bearish given the sequence of lower highs as well as the lower lows in the market. So from the daily time frame, if I clean my chart and remove everything, then you can clearly observe that this is a market that was on a very strong bullish momentum, had a big swing correction here, attempted to move higher, and that market was unable to form a higher high. So with that in mind, after the correction here, market moving all the way down, pulling back up and failing to form a higher high. Now you can see the sequence here, an attempt further to move downwards, and then a rally that failed to form another higher high. So now if you go to an even smaller time frame, then you notice that this was the prevailing pattern, and now we are breaking that pattern towards the lower side. So in this case, if you're trading for some form of a pullback, the more likely scenario or outcome is that the market goes down, retests the breakout point, and then continues in the direction of the break, which is most likely going to happen in this direction as the gold prices continue experiencing a correction towards the end of the year. And this being the first week of December, remember, markets tend to slow down as we approach the end of the year. And then we see volatility coming in strong towards the beginning of the year. So from 1st January, we should be seeing more liquidity in the markets. But now, as we approach the holidays, we should be seeing liquidity continuing to reduce over time. So Brent oil seems like the chart of the day, quite bullish, especially given the news from China. So on the other hand, US equity indices, they seem to be trading inside of a pattern that has failed to breach the previous levels of support and resistance. So of course, the previous high was all the way up here. This was a new all-time high for the Nasdaq. The support was here. And now for the entirety of last week's price action, the market remained within this pattern here. And this seemed like some form of a market channel, but then the market broke towards the lower side and then accelerated higher, leading to this expectation that the market is now potentially trading sideways. So if you look at this and then you try to understand the price action here, so for 5 straight days, this was the price action. So overall, we can say that the Nasdaq was literally moving sideways, and now it might be headed, let's say, towards the lower trend line here and then up, but we are not seeing much of a momentum here. So let's be patient and see what develops maybe on Tuesday. But for now, it seems like these markets are taking more of a sideways turn rather than the normal trending uh, markets we have been accustomed to over the past couple of days. So clearly, even for the Dow Jones, which has been the most bullish, especially on the Trump trade, it seems like this market is just moving sideways and then making an uptick. So I just want to highlight this for you guys. So there was this period where the market was moving this way, and this was the upside versus downside. And then we got into this, and this was the movement as of last week. So clearly, we don't have a major trend. So attempts to form new all-time highs are being faced with a big sell-off. It happened last week on Wednesday, then on Friday, and today you can see that the candlesticks are really small since market open. So we don't have much activity happening in this charts. So we will remain vigilant until we see major moves appearing or blueprints of buyers or sellers entering the markets. So far, it seems more of a consolidating market, and this implies less opportunities, especially on Mondays. So we look for the more volatile assets. So SP 500, after hitting a new all-time high above this area here, notice that it wasn't able to maintain the bullish momentum. So now it's pulling back downwards. So clearing, we were in this kind of formation here. Market managed to break towards the end of the week on Friday. And then after that, notice that even after breaking out, it just got back to the same pattern. So it's more of a wait and see scenario until we get a clearer pattern. So Bitcoin is having an early morning sell-off. So since the market opened, we got to a high of around 98,111, and now we are down 2.85% to by $27.92 per Bitcoin. So getting to 95,303 implies that this might be a red day for Bitcoin for the rest of the day. So of course, key level targets would be around 94,731 and 93,255. So clearly quite a weak market for the day. Silver also continues with the bearish momentum. So despite ranging here last week, was several attempts to move even lower. So of course, we tested this support area here and bounced quite strongly. I remember when we were talking about some form of liquidity grab here on Thursday, and then the market moved all the way up, and now we are seeing this sequence being reversed, the market potentially heading to 29.684 price action level. So if you look at European equity indices, they're also making some form of recovery. The Spanish 35 IBEX also making some good recovery after the sell-off at midnight. The Euro 50 cash index also making some form of recovery to recover some of the earlier losses. And also the French 40 seems to be making some form of recovery, trying to open the weekend, to cross the weekend gap. So outside of that, I remember we talked about the Mexican peso last week. So last week at the open of the market, we saw the Mexican peso really losing to the euro as well as the dollar. But then later on, it made a recovery and then continued losing again. So it was the same thing also with the dollar. So big rally dollar against Mexican peso. Then we pulled back. We didn't quite get to the target. And then from then, you can see things reversing, indicating that the dollar may continue pressuring the Mexican peso for the rest of the week. And now we are moving towards the previous highs. So the one currency that I talked about and I haven't checked would be USD against the Indian rupee. So allow me to check for this. So just give me a sec. Somehow I can't find the currency. So I would have to leave these with you guys. So just check the performance of the dollar trading against the Indian rupee and then see how it has been moving this morning. So uh, I believe I already answered this question. What's your opinion on trading during the month of December, given that it's a holiday month? So, in a holiday month, given the overall trends we have been seeing over the year, so if some people or some investors are taking some breaks to go on holiday, then you might see some of those trends reversing. So, you tend to see markets more of consolidating towards the end of the year, and sometimes you may experience what we call a Santa rally. So Santa Rally usually happens on that short week between Christmas and New Year, where markets are trading on low liquidity. But if the overall sentiment is positive, you might see the SP 500, Nasdaq, or Dow Jones moving up about 1 to 1.5% for that period. So please mention personal training sessions and how to get them. We don't have personal training sessions at FX Pesa. We have Zoom sessions. Of course, they are personal, but of course, there will be more or other attendees in the Zoom session. So you can always check with your account manager or from our website, and you'll get a link for that. Register for that, and you'll be able to access all these classes. So if you prefer learning by your own, you can check out the Novice to Pro series. It's available on FX Pesa YouTube. And if you are just currently trading and you know what you are doing, then you should follow the Market Snapshot series, which is live sessions that happen every day from Monday to Friday at exactly 11 a.m. So a good question here. What will happen if the OPEC decides to postpone the planned production increase for the third time? If OPEC decides to postpone this, then clearly this should be strengthening for oil prices. So, by OPEC planning to expand oil production, of course, this is expected to drive prices lower. So, if they postpone, then oil prices could continue with the bullish trajectory. So another question here, how does inflation affect the markets? So we tend to visualize inflation as a key factor that is used by central banks to make interest rate decisions. So every central bank will tend to have an inflation target. For instance, the Federal Reserve Bank of the US has an inflation target of 2%. So when inflation is much higher than that, the Federal Reserve Bank of the US will seek to slow down that information to that inflation to 2%. And in that case, they respond by hiking interest rates. However, if inflation drops back to 2% and interest rates have remained high, then they will seek to cut those interest rates. So actions that are directed at increasing interest rates tend to strengthen the currency, and actions that are directed at cutting interest rates, in this case, then sorry, cutting interest rates tends to weaken the currency, and hiking interest rates tend to strengthen the currency. However, you don't trade currencies individually. So, of course, you still have to compare between one currency and another and see the divergence or the difference in interest rates and monetary policy before making a decision. And then, of course, as always, you have to combine these with your technical analysis skills. So I've observed that the oil is a better pointer of the USD than the dollar index and the bond yield. What is your opinion on this? No, the currencies are basically determined by central banks. So the biggest pointer of the direction of the US dollar is the Federal Reserve Bank of the US. So the central bank has all the power, it determines the direction. And one of the key instruments they use, of course, in monetary policy is the bond markets. So bond markets tend to be quite effective as showing the strength of the dollar. But then comparative analysis of the dollar versus other currencies will bring this inclusive approach where you're able to visualize the actions of these different central banks compared to the dollar. So the dollar index tends to be a little bit more accurate than all these other factors. So the dollar index tells you what is happening. The central bank tells you what they are looking to do. And of course, the oil markets tend to have other factors impacting the prices, especially demand, supply side, and the OPEC plus politics and dynamics. So, last question here. Gold, euro, and gold against the US dollar, they seem to be having quite divergent charts. Will the same forces affect gold euro again? Is it logical to expect it to make major recoveries? So gold euro, whenever you think of that particular pair, always think of it as a derivative of gold USD and euro USD. So it's either you multiply the prices or you divide. I don't know the exact function, but it's not just a unique asset. It's a derivative of two assets, a derivative of gold against the US dollar and the euro against the US dollar. So it doesn't trade individually to have its own divergences. It's just reflective of what's happening with gold USD and euro USD. So is the tensions in Syria any impactful in the market? Also, is the acquisitions between Israel and Hezbollah going to refuel the bullish momentum in gold? No, I think there is a very strong Trump bet currently happening in the markets today or right now. And the bet is that the current president elect, Donald Trump, will be able to negotiate a peace deal among all these warring countries. And that has been the bet since the election date on the 5th of November. So that has been the prevailing expectation in the market. So unless we see the markets doubting that, so far the price of gold has been deleveraging. So the premium on gold has been reducing. So if you look at your gold prices, you'll notice the same thing. So you just have to check on your charts since what happened on the election date. So I'll try and go back here. So this is the gold chart. When was the election? Should have been November 5. So this is when this happened. So November 5, gold starts dropping and keeps dropping. And since then, we have been trading below that. And this basically shows you what was happening here. So from this point, all we have been seeing is bearish momentum in gold, meaning that the market is eliminating that premium of war, that fear, mainly because they expect Trump to negotiate a good trade deal. So last question, you're asking of Nasdaq Q4, sorry H4 triangle. I wouldn't call these a triangle. I know it may seem like it, but I would say it's more of a flag than a triangle. More of this trend line now being adjusted here, and now the market is trading in this. I would say in this channel, but since last week when the market was unable to form higher highs, so it's more of a sideways momentum, and of course this could be triggered by the non-farm payrolls on Friday. Then we see a single unidirectional movement. So thank you very much, everyone. Thank you for your time. I hope to see you on the next session. So remember, if you're watching this on YouTube, like and subscribe to the channel. If you're watching this on X, like and share the video. And of course, we have a new episode coming up on the Bullish Banter podcast. Check it out on all podcast platforms. Check it out on FX Pesa YouTube. And on top of that, the Mombasa Masterclass event is coming up on this Friday. So make sure to check out the links on our social media handles, book your seat, and be ready for a very engaging session. So also enjoy your December. So this month I might be closing early. Of course, I haven't taken a huge break all year, so be prepared as the market slows down. At some point, I might take a break, and then we meet in January. So thank you very much, everyone, and I hope to see you on the next session. That should be tomorrow at exactly 11 a.m.